Are you a QuickBooks Desktop user who does international business overseas? Well, then you need to know how to use the multi-currency feature in QuickBooks Desktop. You see, this feature allows you to account for the changes in exchange rates between the currency that you're working with and your home currency where you live. It even will help you calculate and account for the fees for converting the currency when you make your transactions. My name is Mark Smolin. I'm the founder and CEO of Worldwide QuickBooks. I personally guarantee you the clearest possible explanation for every topic that you could need when using QuickBooks Desktop to manage your multi-currency transactions. All you have to do is watch a little of this video every day, watch it in proper order, and follow step by step. And by the time you finish, you will be an expert in the multi-currency feature in QuickBooks Desktop. In fact, if that's not enough, you even have the benefit of a live teacher because I answer all my students' comments immediately. All you have to do is leave your question in the comments section below. You have all that right here on YouTube, and it's all free. So why exactly do we need the currency feature in QuickBooks Desktop anyway? Well, sometimes we pay or get paid in more than one currency. And the currency of the country that the business is registered in is called the home currency. And you will have most of your transactions in your own home currency. However, when QuickBooks displays the result of a transaction in another non-home currency, the resulting numbers are displayed in the home currency or the equivalent of the home currency. For example, if 200 Guyana dollars are currently equal to US dollars, then we record receiving 2,000 Guyana dollars and QuickBooks will display $10 as the amount of the transaction. And QuickBooks will add or subtract $10 to the accounts that the transaction will be recorded in. If it was 2,000 Guyana dollars earned as income, then for example, the income account would increase by 10 US dollars. And if, for example, it was paid for something like delivery expense, it would lower the bank account by $10 and increase the delivery expense account by $10, because that's what we paid for the 2,000 Guyana dollars, and that's the US equivalent. So what's the problem? Why can't we continue to record things this way? The problem is that the value of one currency always changes in relation to the value of the other, so we don't really know if we're supposed to add or subtract $10. You see, sometimes the dollar goes up and the other currency goes down, and vice versa. And this becomes an issue if we receive the other currency on one day and then transfer or pay the currency on another day. On the day that we pay that currency, there will be a difference in value of the currency from the day that we received it. So let's do the following example. Let's imagine that on the day we received the 2,000 Guyana dollars, they were worth 10 US dollars. And on the day we pay them to a vendor for a service, these same Guyana dollars are only worth 9 US dollars. Therefore, on the day that you pay out these Guyana dollars, assuming you pay all of them, you have lost 1 US dollar because of the constant changing of the exchange rates between the dollar and the other currency. And in addition to the fact that there will always be a gain or loss after each multi-currency transaction, there could be several consecutive transactions that follow from the first, which means you're gaining and losing money all the time because the exchange rates always fluctuate. So let's think of a more tangible example. Imagine you made an invoice in 2,000 Guyana dollars and sent it to your client in Guyana. Between the moment that you sent the invoice and the moment you received payment, the Guyana dollar value changed, and then you actually received 2,000 Guyana dollars that were then worth $11 on the moment that they paid you, because the Guyana dollar went up against the US dollar between the moment you gave them the invoice and the moment that they paid. They still paid the 2,000 on the invoice, but now that's worth $11. So after gaining $1, what you would then do is deposit the money into the bank on another day. And if you wait long enough, the value of the Guyana dollar will go up even more. So if you recorded receiving the payment where it was actually worth $11, and then a day later you go to deposit that payment, and that 2,000 Guyana dollars on the third day is now worth $12, well, guess what? You just gained another dollar. So you see, it's fantastic, but it's not always good news, because now your 2,000 Guyana dollars that were worth $12 when you deposited them into the bank are now going to pay an expense, and at the moment you go to pay the expense, the 2,000 Guyana dollars are now again worth $9, which means you just lost $3 between the moment that you got the money and the moment you went to pay for the expense. So how does QuickBooks Online handle this? Well, for each consecutive transaction with non-home currency, QuickBooks will record the transaction at the current rate of exchange. Each of these consecutive currency transactions will be recorded with an additional adjusting journal entry that QuickBooks will make to automatically record the gain or loss from the difference in the exchange rate for each of these transactions. And all of the gains and losses will be recorded in one particular account that QuickBooks creates called Exchange Gain or Loss. And that number will go up and down as you continue to do transactions with the currency that fluctuates. And then at any moment that you run a trial balance, whatever the current balance happens to be will be displayed at the bottom of the trial balance for the amount of accumulated gain or loss that you have from using two different currencies. So there's a lot to know when using multi-currency. Transactions that are converted at the moment of the transactions that have their currency converted at the moment of the transaction are managed differently than transactions physically made by receiving, paying, or transferring in the second currency. So how exactly are you going to learn this? Well, if you simply watch a little bit of this video every day and create a separate file in your QuickBooks Desktop software just to use for this video, you will be able to follow along step by step. That's it. You will be an expert in multi-currency QuickBooks Desktop feature by the time you're finished, and I promise you, you will have everything you need. And although you should watch the topics in proper order, I put something in the description field that will help you study. If you click the Show More button in the bottom right of the description field right under the video, it will open up and reveal the table of contents. And once you see the table of contents, you'll be able to click on the time index of the particular chapter that you would like to review so that you'll have total control over navigating this video and learning well. It will jump right to the chapter you need if you click on the time index right next to the chapter name. So, go ahead and make a separate example new company file. Watch this video in proper order, at least the first time around, and use the table of contents. I deeply appreciate all my students and fans, and don't forget to stay in touch.
Chapter 3. Activating the multi-currency feature.
Before you can use the multi-currency feature and record transactions with more than one currency, you must activate the multi-currency feature in QuickBooks Desktop. This means opening the Preferences window and clicking one box to turn it on. But you may well ask, what will happen in the file after the multi-currency feature is activated? There are a specific set of changes that QuickBooks will make to the file at the moment that you activate the multi-currency feature. For example, a new list will be added to the main menu list choice in order for you to manage multi-currency. And you can see right now the currency list is not here, but when we activate multi-currency it will show up, and when we click on that choice we will get the currency list window, and it will be this window, the window that behaves like any other window in QuickBooks Desktop as far as a list item, and you will use this in order to manage your multi-currencies. What else will change? Well, as soon as you activate multi-currency, you will see a new set of reports will be added to the Reports main menu as a direct result of activating multi-currency. And you can see right now, if we click Reports, Company and Financial, we don't have any reports that relate to multi-currency, but they will be there after we activate multi-currency in the file. What else will change? Well, when you open an invoice or any transaction document, a new set of data fields will appear in order for you to manage any of the currencies that have been activated and make transactions with those currencies. And you can see right now that only the US dollar, and there's no option right now for multi-currency, but there will be right after we activate the multi-currency feature. To activate the multi-currency feature, click Edit, Preferences, and the category of preferences will be multi-currency. There are no personal preferences, so click Company Preference. Multiple currencies, Company Preference, click Yes. Okay, now you're about to turn on multi-currencies. Before you do, read these important considerations. You cannot switch it back. So I suggest that you make a copy. I suggest that if you're doing this with me, you should click No, and then make a copy of your file just in case. But I will click Yes because I made a copy. And right now, the home currency in my case is the US dollar. So I'm going to click OK, and it will say you have to just click OK to change the settings, and you're fine. Now we see the changes in the file. Click List, and now we see that the currency list has been added to the file, and here are all of the potential currencies that we will learn about in our next video. What else do we know? Well, if we click Reports and we go down to Company and Financial, we see that there are two reports that have been added that directly relate to the currency feature in QuickBooks Desktop. So you can see the file has changed, and the last thing to look at is when you click Customer, Create Invoice, or any transaction window. Now, when you choose any existing client, you will see that it also says US dollar next to it instead of just blank, because it's expecting other currencies later. Congratulations, your file has been activated for multi-currencies.
Chapter 4. Adding overseas customers and vendors.
Adding additional currency involves using the currency list. The currency list is a window that behaves the same as any other list in QuickBooks. all currencies available are on the list and are inactive until needed. All you have to do is click the checkbox and you can see all of the currencies that are available. From the main menu, click List, Currency List, and you can see that only 3 currencies were available by default in addition to the home currency, the US dollar. QuickBooks has already activated the 3 most likely currencies that people in US deal with if they're not dealing with dollars. But let's stretch this window tall and then click Include Inactive, and you can see all of the available currencies that QuickBooks is able to use in this file are now on this list. And anyone that is not activated has the X next to it. And it's very easy to activate any of these once you can see them. Now, the value of the currency will be whatever the exchange rate is at the moment of activation. So for example, when I activated Russian rubles on January 7th, Russian rubles were 0.012 of a dollar. That means that 1 ruble is equal to 0.012 times $1. And that's what it was at the moment I activated rubles in the other file. Now, let's activate Russian rubles right now. So, we have to scroll down to the R's because this list is in English. Russian ruble. Click on it. And then at the moment you select it, you come down and click Currency, Make Currency Active. That's all you have to do, and the X disappears. Now, if you close this and you reopen the list, currency list, and you include active, now you see only Russian ruble is added because that was the only one that we activated. Now, you also want to add Guyana dollars, okay? Because let's imagine we do business in Russia and Guyana. For some reason, those 2 countries. Okay, but it's an example of a second currency. So we click Include Inactive and we go up to the G's. Guyanese dollar. And at the moment you select it, you click the bottom left, Currency, Make Currency Active. And now when we remove the check mark, Guyanese dollar has been added to the currency list. What else? Well, we must also add the currency to the customer data. Now, this is a very important point when you're finishing your setup for multi-currency. For each customer you add to QuickBooks, you must tell QuickBooks which currency that customer will pay you with. Only customers who pay you with active currencies, which means currencies that we just put on the list, will be able to save their transactions in the customer list. Simply choose the currency when you first input the new customer. And the rule is you're only allowed 1 currency per customer. That rule really applies here. You cannot have a customer on your customer list that you can make transactions with more than 1 currency. And unfortunately, you might need to add the same customer twice if you do business with that customer with 2 different currencies. So let's add Henry Goodman from Guyana. He's a nice guy, and he's a customer who needs to pay us in the Guyanese dollar. So we click open the Customer Center. We click Customer, Customer Center. And now, actually, Henry is on the list. See, so the person could already be on the list because we already know how to add a new customer. But Henry, we don't charge US. Because the Guyanese dollar has been activated, it will show up in this list when we add a customer, Guyanese dollar. Let's make his name Henry Goodman. Because he is a good man. Click OK. Who else do we want to add to our foreign customer list? How about Yuri Buri in a hurry? 2,000. Let's say he pays us in rubles. So let's add Yuri Buri to the customer list and charge him rubles. Customer, customer center, new customer, new. Okay, and his currency is on the list and it's activated. So it's in this pull down here, Russian ruble. Click OK. Now, whatever we do to customers regarding adding currency, we must also do to the vendors. So for each vendor that you add to QuickBooks, you must tell QuickBooks which currency you will pay them with. Only vendors whom you pay with active currencies, which means currencies that we put on the list, will be able to be saved in the vendor list. Simply choose the currency when you input the new vendor. And just like with customers, one currency to a customer, one currency to a vendor, and if for some unlikely reason you have to pay the same vendor with a different currency, you might have to put that vendor on the list twice and separate the transactions with the different currencies. So let's add Gina Cassina from Guyana, who gives us delivery service. Vendor, vendor center. Okay, is Gina here? No. New vendor, Gina Cassina from Guyana, and she needs to pay us and needs to be billed in Guyanese dollar, and we click OK. Who else do we need to add? Let's add Yelena Mitrofena from Russia, who we pay her in rubles for legal and professional services. Okay, so we go vendor, new, Yelena Mitrofena, and we need to pay her in Russian rubles, and click OK. Congratulations, you're all set up, and now you're ready to receive payment and pay in other currencies using the QuickBooks Desktop multi-currency feature.
Chapter 5. Billing and receiving in a foreign currency.
Sometimes we have customers that require that we bill them in their own currency for some product or service that we provide. We can invoice or bill the client in any currency that we have activated and assigned to that customer. They can pay from pay platforms like PayPal that can convert their currency to dollars. So there are really two kinds of multi-currency transactions. They're the kinds of transactions that are converted to or from the home currency at the moment of the transaction. And then there's the kind of transaction where we physically pay or receive the other currency. Now this video and the video that follows will focus on this kind, the type of transaction that gets converted before we pay it or before we receive it. And in this example, there is no fee to transfer the currencies or to exchange the currencies. Before we receive payment, we will see how to handle the fee in the next video following this one. When you first bill for service in another currency, this is what happens. You must first download the current rate of exchange for that currency before recording a transaction in that currency. This will establish the initial value, or let's call it the starting value, of the currency for any future gain or loss. It is the exchange rate on the day of the first transaction. You will input the transaction with the number of units in the other currency, and the amounts that QuickBooks records into your accounts and into the customer or vendor records will be the dollar equivalent, or let's say the home currency equivalent amount of the transaction. So let's go ahead and download the exchange rate for rubles so that we can do a service with rubles. Well, we'd have to come here and click lists and then go to currency list. Now, notice ruble is one of the currencies that we activated in the prior video. So we click on ruble and we click activities and we click download latest exchange rates. It's actually going to do that for all of the active currencies. Download latest exchange rates. And we simply wait for the computer to connect to the internet and establish the rates as of today, January 11th, 2021. And it means that $1 is equal to 0.01337 rubles. And now let's do our example. Let's imagine on January 11th of 2021, we did legal services for Yuri Buri, and we must bill him in rubles. He agreed to pay 10,000 rubles in the future for the service that we gave him today. First, we download the exchange rates for the very first time. Then we will send him an invoice for 10,000 rubles, not dollars. QuickBooks will create a new account receivable type of account just to show the dollar equivalent of how much we are owed in rubles at the moment of the first transaction that we have with rubles. So how much will that be in US dollars? Well, we just downloaded the exchange rates and we saw that on the list $1 equals 0.01337 rubles. 10,000 rubles times 0.01337 means the dollar equivalent of the service that we are billing him for is $133.70. So what will be the result? Well, we just earned $133.70 more worth of income from legal fees. So income from legal fees will increase to $27,133.70. And of course, because this is our first transaction with rubles and we are owed a foreign currency, QuickBooks automatically creates a new account receivable account just to show how much is owed in rubles. And the dollar amount that is owed to us in rubles is $133.70. And that's what the trial balance will look like after we record this first invoice. So let's go ahead and make the invoice. Customer, create invoice. Now the customer is Yuri Buri. Notice automatically QuickBooks remembers that he needs to pay us in rubles, or we need to bill him in rubles in the future. The date was January, well, let's make it January 11th instead of the 10th. And the item of service is legal services rendered. Now, in this example, there is no quantity or price each. It's just a flat fee for legal services. But watch what happens at the bottom here. By the way, notice QuickBooks remembered the exchange rate that we just downloaded. And in a future example, we can actually change this at the moment we record the transaction. But we will not in this first example. We will type in 10,000 because that's the number of units in the other currency, the ruble, and QuickBooks will show the US dollar equivalent of the ruble as the balance of the invoice. Notice the accounts receivable account that it gets recorded in is the specific one for rubles. When we click Save and Close, we can open the trial balance, and you can see the results are exactly as what we expected. Income from legal fees increased to $27,133.70, and accounts receivable, what's owed to us in rubles, or the dollar value of what's owed to us in rubles, is $133.70. If we click on the Open Invoice Report, you can see that Yuri Buri owes us $133.70, even though from his point of view, he owes that amount in rubles. So what happens on the day that we get paid for the invoice? Well, the day we get paid, the rubles are worth a different amount from the rubles on the day that we created the invoice. We can either download the new exchange rate for the day we got paid, or we can input the exchange rate that we need it to be into the QuickBooks record at the moment we record receiving the money. Then QuickBooks will record the transaction normally, but add an adjusting journal entry for the difference in rate from the invoice date to the payment date. For example, let's imagine on January 15th, we received full payment from Yuri for the invoice from January 11th. If we received full payment, that means he paid us all of the 10,000 rubles that were on the invoice. The rubles were worth $0.01337 on the day we made the invoice. However, today, January 15th, those same rubles are now worth $0.014. So what's the gain? Well, the dollar was 0.01337 rubles on the day we made the invoice. Now, the day we get paid, the dollar is 0.014 rubles. The increase per ruble is $0.00063. And that gain goes for every single one of the 10,000 rubles. So if you multiply the gain times 10,000, that means the gain from exchange is $6.30. It's very easy to multiply times 10,000. Just move the decimal point over and you see if the gain was $0.00063 for each one, times 10,000, that's $6.30. Another way of looking at it is that the day we made the invoice, the rubles were worth $133.70. And then we held on to that invoice, and then the day we got paid, that day the rubles, those same 10,000 rubles, were then worth $140. So you just gained $6.30 just by waiting to get paid. And you may well ask, what will be the result in the trial balance when we get paid from Yuri? Well, we no longer have accounts receivable in rubles because in this example, Yuri is paying all of the 10,000 rubles that he owes us. So the Ruski account receivable for rubles goes down to zero. But the amount that's physically paid into the bank account is $140, the amount that it's worth at the moment we got paid. So our bank account increases by $140 and becomes $2,540. And the difference shows up at the bottom of the trial balance on the credit side. The gain on the currency exchange will be $6.30. From the main menu, we click Customers Receive Payment. Now, the date we're getting paid in this example is January 15th, and the person who's paying us is Yuri. Notice when we choose Yuri, the Payment changes to rubles, and Yuri's open invoice shows up here. Now, of course, we're going to click the check mark because we are imagining that we got paid the entire amount of the invoice. However, if the currency is being converted and then deposited directly into our bank account before, after it becomes ruble, after it changes from rubles to dollars, what's happening is Yuri is paying through a platform that changes the 10,000 rubles to dollars and then deposits that money into our bank account. So we cannot let it go into undeposited funds. We must record it deposited into the Chase bank account on the day the bank got the money. Now, regarding the amount of money, we will now change the exchange rate on the day that we got paid to 0.014 and push tab. Notice as soon as you do that, the dollar amount received in the bottom right of the invoice changes as soon as we manually change the exchange rate ourselves. Now, I will not get into the reasons why you would have to change the exchange rate yourself at the moment you record a transaction instead of downloading the new latest exchange rate. That will be a topic for another video. But for now, just understand we have to change the exchange rate manually at the moment we receive payment, and that makes $133 become $140. But now when we click Save and Close, you can see the result, and the trial balance is exactly as what we expected. We have 0 rubles that we will receive in the future, and our bank account has increased to the money amount we predicted, 2,540, and exchange gain or loss shows up for the first time as $6.30. And if you'd like to see where on the profit and loss this exchange gain or loss shows up, we open the profit and loss and you can see here's your ordinary net income from your normal service fees and expenses. Then anything unusual that has nothing to do with your operations shows up below net ordinary income, and the exchange gain or loss is $6.30, and it increases your net income because it's a slight gain. Don't worry that it has a minus in front of it. Other income is $6.30, and it increased your overall net income.
Chapter 6. Payments with Conversion Fees.
In this second example, the payment we receive from Yuri will be directly deposited into the bank account. However, if you need to deduct an exchange fee, you need to make an intermediate step. You need to record the full payment in the undeposited funds account. Then, with the same date, record the payment as deposited in the deposit window. That will give you the chance to deduct the fee. For example, let's imagine on January 25th, we did legal service for Yuri Buri, and we billed him for 10,000 rubles. Each ruble was $0.013 on this day, January 25th. On January 30th, he pays all 10,000 rubles. The ruble is only worth 0.012 of the dollar on that day. The loss is $10 on the exchange, just like we learned how to calculate in a prior video. And to add insult to injury, they also deducted a $20 fee for the currency exchange and the transfer of funds. So how do you handle this? Well, you would record the payment the same way that we learned in the prior video, except this time you would not choose bank account, you would instead choose undeposited funds. Then, immediately after recording the payment, you would open the deposit window and deduct the fee and record the net amount into your account. So first we record these two transactions. January 25th, we did legal service, 10,000 rubles, 0.013 for Yuri. So let's record that. Customer create invoice. The customer is Yuri Buri. The date is January 25th of 2021. Okay, now the item of service is legal services rendered. And the number of rubles on that day that we billed him for was 10,000. And they were worth 0.013. So if you're following along and yours does not say 0.013 for the exchange rate, then you type it in. Now, let's just, okay, and then he'll pay them. And then he'll pay them. So, right now, let's just record this invoice. Save and close, and we look at the trial balance. We are owed 130 US dollars worth of rubles, and we just earned 130 more dollars in legal service fee. And that's the result after just recording the invoice. And now let's record the payment. On January 30, the ruble was only worth 0.012 of the dollar when we got paid all 10,000 rubles. So the loss on the exchange is $10 because we calculate it just like we learned in the prior video. So what will be the result after step 1? Just recording the payments into undeposited funds. Well, if they paid all 10,000 rubles, then accounts receivable rubles will go down to 0. And because they were worth 120 US dollars at the moment we received them, then undeposited funds will increase by $120 and become 2,120. And the difference is a $10 loss. Now, right now, we have a $6.30 gain. But if we put in a $10 loss against a $6.30 gain, we wind up with a net loss of $3.70. And these will be the numbers just after recording the first step of receiving the payment. So we click Customers, Receive Payments. Now, we choose Yuri, and we know that the date we received the money is January 30. And we know that at the moment we received the money, it was only worth 0.012 of a dollar, not 0.013. So if we put in all 10,000 rubles, we're imagining we received all of the rubles that Yuri promised to pay, you can see that if the exchange rate on the 30th is only 0.012, that we're only getting 120 US dollars, and we have a $10 loss. So we click Save and Close, and when we look at the trial balance, the numbers are exactly as what we expected. Undeposited funds went up to 2,120. Cash and bank only increased by, well, cash and bank didn't change, just undeposited 2,120. Account receivable went down to 0 because they paid all of the rubles that they were supposed to pay. And the exchange gain or loss moved from the credit side to the debit side. Here, double click, take a look. It was a credit balance of $6.30, but then we made a debit of a $10 loss for this January 30th payment. So the net result is a net loss overall of $3.70 for all the exchanges. And now that we've recorded that, the very last step is to deduct out the fee and acknowledge that it actually went into the bank account. Now we're recording this deposit on the same date as the received payment, so the exchange rate will be the same. The financial institution deducted 10,000 rubles for the exchange to convert the currency to dollars and then transfer it into our Chase bank account. And the expense that they deducted, that we record for the 10,000 rubles, is an expense called exchange and transfer fees expense. And if you don't have it in your chart of accounts, you should pause the video and put it in your chart of accounts. So what will be the results after this next step? Well, the $120 will no longer be in undeposited funds. They will be moved to the bank account. So undeposited funds goes down to $2,000 and the bank account goes up to $2,648. And of course, the fee shows up as transfer fees expense in the US dollar equivalent of the 1,000 rubles that they deducted. And at this moment, that equivalent is $12. And this will be the result after the last step, that we finish recording the deposit and deduct the fee. From the main menu, we click Banking, Make Deposit. Now notice it's only showing us dollar payments. We have to change this to Russian ruble. And now we have all of the payments we received in rubles. Click this one because this is the one we're depositing, and we click OK. And now under the undeposited funds, we click here and we find the expense that we put on the list, exchange and transfer fees expense. Click under the 10,000 rubles and put minus 1,000 rubles. So they're deducting 1,000 rubles, okay, which is basically equal to $12 just for this transferring and exchanging and converting the currency at the moment that they put the money in our Chase Bank. So our Chase Bank is only going to increase by $108, and undeposited funds will go down by the 120, and of course the exchange fee will show up as $12. When we click Save and Close, you can see the numbers are exactly as what we expected. Undeposited funds is 2,000 even. Cash in Chase Bank is 2,648 because only $108 was placed into the account. And after that last step, we now properly acknowledged exchange and transfer fees expense.
Chapter 7. Receiving payment from overseas customers.
Sometimes we need to receive payment in a foreign currency in order to have certain customers. We therefore must have a bank account that has funds in the currency of the other country. After the administrative tasks necessary to open an account with the other currency, you are then able to receive payments from customers who can only pay in their own home country's currency. When you receive payment from a customer into the foreign currency bank account, the currency has a specific value in US dollars on the day their payment is deposited. QuickBooks will remember the dollar value per unit for each of the units of the currency you receive. This value is from the exchange rate on the day the customer's payment was deposited into your foreign currency bank account. For example, let's imagine on February of 2021, we started doing business with Henry Goodman from Guyana. He pays us in Guyanese dollars, not US dollars. In order to service him, we must agree to receive payment from him in Guyanese dollars. Therefore, we must have an account in the First Bank of Guyana, which is an account in a bank in Guyana, in order to receive payment in Guyanese dollars and possess units of this currency. So from the main menu, we click List Chart of Accounts. Now we go to the bottom and we click Account New. Now, this is a bank type of account. We click Continue, and the currency will be one of the active currencies. So if you watch the prior video, you know that these were the currencies that we activated, and we will choose Guyanese dollar. And the name of it can be Bank of Guyana, and spelling doesn't count. Save and close. Now we're physically ready to receive Guyanese dollars. Don't forget that in our customer records, we already put Henry Goodman, and Henry Goodman accepts Guyanese dollars. We had already put that when we set up the file for the course. So let's do the example transaction. Let's imagine on February 8th, we did legal services for Henry Goodman for 10,000 Guyanese dollars and made an invoice for him. The Guyana dollar at this moment, February 8th, is worth $0.005. Well, that should be easy. So, customer, create invoice. The customer is Henry Goodman, and the date was February 8th, and the service was legal services, and Henry Goodman gets paid in Guyanese dollars, 10,000. And now we must change the rate to be what we need it to be, $0.005 US on exactly February 8th, 2021. That means that we are owed 50 US dollars for the 10,000 Guyana dollars that we are billing Henry for. And when we click Save and Close, you can see the trial balance reflects accounts receivable in Guyana dollars 50, and income from legal fees has just increased by the 50 US dollars that is equivalent to the 10,000 Guyana dollars that we just billed Henry for. The most important thing to learn regarding multi-currency in QuickBooks is that the QuickBooks customer records will remember that accounts receivable Guyana has 10,000 units of currency, in this case Guyana dollars, and each was promised to us at the moment that each one was equal to $0.005 of a US dollar. The most important thing to remember is that QuickBooks has this data about each unit of currency somewhere behind the scenes. You cannot check this, but you will see the results of this, and it will confirm that QuickBooks tracks all individual units of currency and what rate they were acquired at. Now, you will see a demonstration of this, and you will see the result. So let's continue with our example. Let's imagine on February 11, we received payment for the Henry Goodman invoice. Now let's imagine on February 11th that we only received 5,000 of the 10,000 Guyanese dollars listed on the invoice. At the moment the money was deposited from Henry into our Guyana dollars bank account on February 11, each Guyana dollar was worth $0.006 US dollars. So what's the gain? Well, the Guyana dollar was $0.005 at the moment we made the invoice, and now at the moment we're getting paid, the Guyana dollar is now worth $0.006. There is an increase per Guyana dollar of $0.001. And since we received 5,000 of the 10,000, that means the gain from this payment that we receive is $5. $5 worth of Guyana dollars anyway. $5 is the gain because it's 0.001 of a dollar times 5,000. So what will be the result after receiving the first 5,000 Guyana dollars? Well, we received half of what is owed to us. So accounts receivable Guyana will decrease from 50 to 25. However, we received $30 worth of Guyana dollars deposited into the bank account. So First Bank of Guyana will show up for the first time with a $30 balance because that is the US dollar equivalent of the 5,000 Guyana dollars we received at the moment the exchange rate was 0.006. And the $5 difference goes to exchange gain or loss. So instead of having a $3.70 debit, adding $5 on the credit side makes a net credit or a net gain of $1.30. These will be the numbers if we properly record this transaction. From the main menu, we click Customers, Receive Payment. The date of the payment is February 11th. The customer was Henry Goodman. Now, the exchange rate on the day we got paid is 0.006, and we only received 5,000 out of the 10,000 Guyana dollars. So we received 5,000 Guyana dollars and at the exchange rate of 0.006 on February 11th. And we click Save and Close. Oh, excuse me. The amount up here, got to put the same amount in the top of the window as the bottom. So you can see if the exchange rate is 0.006 and we receive 5,000, that we're getting the equivalent of 30 US dollars when we get the 5,000 Guyana dollars. Save and close, and the results are exactly as what we expected. Account receivable Guyana decreased by half, went down to 25 because we received half of the Guyana dollars. They were worth $30, and that's why our balance of the Bank of Guyana shows $30. And the difference was a $5 loss that was recorded here in exchange gain or loss. And if I double click, you can see the balance was a $3.70 debit. Then I made a credit of $5, making it a credit balance of $1.30. Now, to properly learn this, we have to follow through and finish our example. Let's imagine on February 15th, we received payment for the Henry Goodman invoice. We received the remaining 5,000 of the 10,000 Guyanese dollars listed on the invoice. At the moment the money was received from Henry, each Guyana dollar was worth 0.007 US dollars. So what was the gain? Well, the remaining 5,000 Guyana dollars on the open invoice are still valued by our QuickBooks at 0.005 per dollar, because QuickBooks remembers that was the value at the moment the invoice was made. The dollar is now 0.007 Guyana dollars. So the increase per Guyana dollar is 0.002 from the time that we made the invoice and the time we're getting paid these last 5,000. So if you take the increase per unit and multiply by how many units, you get the gain that we're going to have as a result of receiving the balance of the invoice several days later when the Guyana dollar has now increased by 0.002. So what will the result be after we receive payment on February 15th? Well, we received all of the money for the open invoice. So the accounts receivable Guyana should go down to 0. And the amount in US dollars of 5,000 units times 0.007 would mean we received 35 US dollars into our Guyana bank account, making the balance of the Bank of Guyana $65. And the difference between the $35 that increased our bank account and the $25 that was on the invoice is a $10 gain. So the net gain will increase by $10 and become $11.30. And these will be the numbers after receiving the February 15th payment where the Guyana dollar has increased. Let's take a look at how to record it. From the main menu, click Customers, Receive Payment. The date we received it was February 15th, a few days later. The customer was Henry Goodman, and we received 5,000 Guyana dollars into our account. Now, if it were only at 6, we would be receiving only 30, but it's not. It's at 7.007 exactly on February 15th, a few days later. So the amount of US dollars that we're receiving the equivalent of 35 US dollars on February 15th. When we click Save and Close, the results and the trial balance are exactly as what you would expect. The Bank of Guyana increased by $35 and became 65. Account receivable Guyana went down to 0 because the invoice is completely paid, and the exchange gain increased to $11.30. And we can double click and we can see that this was the $10 gain from the payment on February 15th that increased the net gain from $1.30 to $11.30.
Chapter 8. Making a Home Currency Adjustment.
When we report financial statements or tax forms, each statement has an official date or date range. The numbers on the statements must be accurate as of the date of the statements. Since currency values change all the time, then you must adjust the value of any foreign-held currency that you own to make it the actual value as of the date of the financial statements. In our example, we will follow from the previous video. In our bank account with the Bank of Guyana, we currently have 10,000 Guyanese dollars. Last February 11, we received the first 5,000 Guyana dollars, and at that moment, February 11, they were worth 0.006 of a dollar. Then, a few days later, on February 15th, we received the other 5,000 Guyana dollars, and at that moment, February 15th, we recorded receiving them at 0.007 of a dollar. So what will QuickBooks remember? Well, of course it will remember that the US dollar equivalent of the Guyana dollars that we own is now a balance of $65 as of February 15th. And that's again because 5,000 of those Guyana dollars were acquired at 0.006, and the other 5,000 that's in the bank account were acquired at 0.007. So the first 5,000 are currently worth in US dollars 30, and the other 5,000 that were acquired later on the 15th are worth 35 US dollars, and that explains why at this moment all 10,000 units of the Guyana dollar are equal to 65 US dollars in our records. And we can prove this by opening the account. Here we are in the trial balance, and here's the Bank of Guyana stated in US dollars. And if we double click, we can see that first we acquired 30 US dollars worth of Guyana dollars, then we acquired 35 more US dollars worth of Guyana, and that's why it's equal to 65. If I double click and open the first one, you can see these 5,000 were received at this rate, 0.006. And if I double click the next one, you can see that the next batch of 5,000 was received at this rate, 0.007. And that explains why the balance is 65 US before our adjustment. Now, in our example, we must report our financial statements on March 1. We did not have any new transactions from February 15th, which is the last time we received Guyana dollars, until now, March 1. However, on March 1, right now, each Guyana dollar is now worth 0.008. We must update the balance of the bank account to reflect the actual value in US dollars as of the date that we report our financial statements, and to do this, we make a home currency adjustment. A home currency adjustment is an entry that we make to our QuickBooks records that adjusts for or corrects for the change in value of any foreign currency that we own. This is a change in value from the date of the last recorded transaction of that currency until the date of the adjustment, which is usually for financial statement reporting. So what does QuickBooks actually remember in our records? Well, QuickBooks remembers how much each of the individual units of currency and how much they were received at the moment that we acquired them, and that reflects the current balance. QuickBooks will change the value of the individual units in our records to reflect the currently updated value, which means instead of having half of them at 0.006 and half of them at 0.007, after the adjustment, what will happen is all of the units that we own will all become the same value, the new value per unit that we put into QuickBooks, and as a result, the balance of the foreign bank account will change in amount regarding the US dollars. So before we adjust, we have $65 in the Guyana bank account. But when we update the cost or the price of each unit, that means that the value of the whole bank account increases from $65 to 85 US dollars, and that means we have a $15 gain at the moment we adjust the value to make our financial statements correct. So what will be the result when we record this home currency adjustment on March 1? Well, the value of the Bank of Guyana has increased from 65 US dollars to 80 US dollars because of the $15 gain and the increase in the rate per each unit. And of course, because that's a gain, then exchange gain or loss here at the bottom will increase by $15, and we now have a total gain of $26.30. It's very simple to enter a home currency adjustment. You click List, Currency List. Then click on the specific currency whose value you are adjusting, and then in the bottom of the list window, click Activities, Home Currency Adjustment. Now, the most important thing is to put the date of the adjustment. This way, QuickBooks knows the value of each unit of currency from March 1 forward. You click and you choose which currency you're adjusting, and now QuickBooks shows you the most recent rate entered for the most recent transaction with the Guyanese dollar. You will change the rate to the new rate as of the day that you are reporting your financial statements. Then when you click Calculate Adjustment, QuickBooks will show you that you have a $15 gain because the balance was $65 because the rate per unit was the old rate. The new balance is $80 because now it's 10,000 units at the new rate, and the gain will be $15. You have to click in the left margin to accept that particular adjustment, and then click Save and Close. Now, when we go back to the trial balance, you can see that the Bank of Guyana is now properly valued at 80 US dollars, and the exchange gain or loss is exactly as what we predicted, $26.30. You can double click and you can see that this gain was recorded as a journal entry adjustment on March 1, and it increased the gain, the overall gain, by $15 for that specific adjustment. And one final note, what else will be the result? Well, QuickBooks now remembers that all 10,000 units of the Guyana dollars we have are now each equal to 0.008, and that's why it's 80 US dollars. So that means when you pay these Guyanese dollars to a vendor in Guyana for some service that you need, QuickBooks will remember there are 10,000 units of the Guyana currency in the account regardless of the US dollar value on the day that you pay.
Chapter 9. Special issues when using the multi-currency feature.
QuickBooks Desktop is the best program in the world. The currency feature is great. You must, however, remember one very important rule before you pay from or transfer from the foreign bank account. You must make a home currency adjustment before paying from or transferring from the other currency out of the foreign bank account. So why do we need to make a home currency adjustment before we remove the foreign units from the foreign bank account? Well, although QuickBooks is so great, if you do not make a home currency adjustment before you pay from the account with the other currency, the account balance in dollars will be out of sync with the number of units of currency in the account. Now, what am I talking about? Well, in the prior video, the balance of the Bank of Guyana was worth 65 US dollars. And that's because we had previously acquired 5,000 Guyanese dollars at the rate of 0.006, and then on a later date we acquired another 5,000 Guyanese dollars at the rate of 0.007. Now, the first 5,000 of Guyana dollars were worth 30 US dollars, and the second 5,000 were worth 35 US dollars if you multiply across. And that's the reason why all 10,000 of the Guyana dollars in the bank account are equal to 65 US dollars. Now, in our example, instead of doing a home currency adjustment like we should before we pay, we simply put the $0.008 per Guyana in the exchange rate window when we record the payment. So we put it here instead of making a formal home currency adjustment. So what happens? Well, QuickBooks will remove all 10,000 of the Guyana dollars, so you will have 0 units of the currency in the account, but they will be removed at the rate of 0.008, not the rate they went in at. The number of Guyana units goes down to 0, and in reality you have a $15 gain like we did in the last video. However, because you did not do a home currency adjustment before you paid, instead of recording the gain, QuickBooks will record a change in the balance of the bank account for the whole amount of the dollar value of the expense that you paid. Now that's the crucial point. Let me say it again. Because you did not do a home currency adjustment before you paid, instead of recording a gain, QuickBooks will record a change in the balance of the bank account for the whole amount of the dollar value of the expense that you paid. So what should QuickBooks record? Well, it should record paying $80 for the expense, and you have a $15 gain at the moment you pay that expense. But what will it record? Instead of a $15 gain, it will instead put the bank balance as minus $15, even though you paid all of the Guyana dollars out of the bank account. For example, let's imagine on February 28th, we paid Gina Casina, a vendor in Guyana, 10,000 Guyanese dollars for a delivery. The Guyana dollar was worth 0.008 on the day that we paid. So what should be the result? Well, the Guyana bank balance should only go down to $65 because we only have 65 US dollars worth of Guyana in that account. Okay, it should become 0 and there should be 0 units left in the account. The delivery expense should appear on the trial balance increased by $80 because that's really the value of what you paid for the service at the moment you paid it. Even though you paid 10,000 Guyana dollars, it was worth $80 of delivery at the moment you paid it. And the gain on the exchange of the Guyana dollars should increase by 15 and make it, I think, 26.30 or whatever it was when we did it properly in the prior video. However, what will be the result? Well, the delivery expense or whatever service you pay for must increase by the US dollar value of the service at the moment you paid. And you paid all 10,000 Guyana dollars, and that's why it goes up by $80. You're paying all of the Guyana dollars in the account. But instead of recording the $15 gain, the Guyana bank balance will decrease by the whole $80. And even though there are 0 units left, the balance of the Guyana bank account will unfortunately go down to negative 15, even though it should be 0, because there are 0 units left. It means that the Guyana bank account will be out of sync regarding the value of each unit compared to the balance of the account. Now, if we pay for delivery 80 US dollars or all 10,000 Guyana dollars, what should be the proper result? Well, we paid $80 worth of US dollars worth of delivery, so delivery expense should increase by $80. And we paid all of our Guyana dollars, we paid 10,000, so the balance should go down to 0, and the $15 should increase the gain and bring it up to what it was in the previous video. But unfortunately, it will not. Unfortunately, what's going to happen is that even though delivery expense will increase by 80 as it should, the balance of the Bank of Guyana is going to become negative 15 instead of 0. and it will not include a gain at all. So there are 0 units of currency, but the balance is negative. Watch. Here are the numbers, and we do banking, write a check. Now the date of this transaction will be February 28 of 2021, and we are paying from the Bank of Guyana, and we are paying Gina Casina. She's a vendor in Guyana who receives 10,000 Guyana dollars for this. Must be one hell of a delivery, right? $10,000 delivery. Now we know that the proper expense is delivery expense. Okay? But instead of doing a home currency adjustment, we are simply changing the number in the exchange rate box down in the bottom left. So once we put in the information, we click say, oh, excuse me, it did not adjust. It has to, good. You got to click back in the field to make sure that it adjusts the value of the US dollars after you change the exchange rate. Click up here. Now when we click save and close, aha! The balance of the Bank of Guyana is a negative 15. That's why it's on the credit side. The gain didn't change, and notice the delivery expense was recorded properly. We did have 80 US dollars worth of delivery, so that part is right. But the gain didn't change and we had a gain. Instead, we have basically a negative $15 balance. Now that's a problem, and I can show you. If you click banking, write a check, and you choose Bank of Guyana, it shows zero Guyana dollar units. And even though it shows 0 Guyana dollar units, that same bank account shows negative 15 US dollars. It is out of sync. It is a flaw in the program. It is a glitch. It is an aberration that you have to deal with if you don't do it the right way. So what's the solution? The solution is to delete the transaction, make the home currency adjustment, and record the transaction again. We can do that very easily. Double click, let's delete this. Okay. Now we'll make the home currency adjustment like we should have. List, currency, click on the Guyana dollar, home currency adjustment, and in this window, we're adjusting the Guyana dollar to be 0.008 at the moment of the transaction, which happens to be February 28. Now we click Calculate Adjustment, and we know it's a $15 gain. And now we click the check mark, and now we to select this particular adjustment, save and close. Now before we record the payment, now we actually have 80 US dollars in the Guyana bank account, and the gain is already recorded. So now all we have to do is click Banking, write a check from the Bank of Guyana on February 28 to Gina Casina, and we paid her. Notice it remembers the 8.008 in the box, so all we have to do is put the number of Guyana dollars that we're paying, save and close, and now you can see we have a proper balance of 0 because we have no units left, and the delivery expense is $580. And the gain was already recorded before we recorded the transaction.
Chapter 10. Making Overseas Funds Transfers.
The most common multi-currency transaction type is a transfer of funds at the moment the funds are converted to the other currency. This is because you must put some money into a bank account to open the bank account. So usually the first transaction is a transfer. Sometimes there is a fee and sometimes there is not. First example, let's imagine on March 5th we purchased 5,000 Guyanese dollars at the moment the exchange rate was 0.008 of the US dollar. That means 40 US dollars will be deducted from your US bank account at the moment of the transfer. 5,000 Guyanese dollars will appear as the balance of the account in the Bank of Guyana. 40 US dollars will be the balance in our trial balance of the Bank of Guyana. So what will be the result after this first transfer? Well, the Bank of Guyana will be stated in terms of US dollars and become $40. And because you transferred $40 out of the Chase Bank account, the Chase Bank account will be reduced by 40 US dollars and become $2,608. So how do we do the transfer? Well, it's very simple. Banking, transfer funds. Now, the date of the transfer in our example is March 5th. The funds are coming from the Chase Bank account and they're going to the Bank of Guyana. Now, they're in terms of Guyanese dollars. So first you should set the rate. And our example clearly states that the rate was 8.008 at the moment of transfer. And these will be the results. So we make sure that this is 0.08 and we make sure we're transferring on the correct date 5,000 Guyana dollars. When we click Save and Close, the results are exactly as what we expected. $40 showed up as the balance of Bank of Guyana in terms of US dollars. And now in our Chase Bank account, we only have $2,608. Second example. Let's imagine on March 10th, we purchased 5,000 Guyanese dollars at the moment the exchange rate was 0.009 of the US dollar. In this case, $45 will be deducted from your US bank account at the moment of the transfer. But only 5,000 Guyanese dollars will increase the balance of the account in the Bank of Guyana, making 10,000 Guyanese dollars in the account, which is now worth 85 US dollars. Now, we would enter this in the same way that we entered the previous example. However, in this case, there is a fee to convert and transfer. The fee is always recorded in terms of the currency of the account that you are transferring to. It is easy to find the amount of fee because it will be clearly deducted from the account after the transfer. So you look at the account that you transferred into, and whatever the difference is between what it is and what it should be is the amount of the fee. You will use the write checks window to record a fee as a separate transaction. So let's imagine this same situation as our second example, but let's imagine in this situation they deducted 200 Guyana dollars for the transfer. So what would be the result before recording the fee? Well, Bank of Guyana goes up to 85 and Chase Bank goes down to 25.63 because that's 45 or the equivalent of 45 US dollars going from Chase to Guyana. Let's take a look and see if that's what we get. So first we do this, banking, transfer. And of course the date was March 10th of the second example, and the money is coming from the Chase Bank account to the Bank of Guyana. And the amount, again, in terms of Guyanese dollars is 5,000. But this time the exchange rate is 0.009 on March 10th. So we click Save and Close, and the results are what we expected they would be after only recording the transfer. Now let's record the fee as a second example. 200 Guyanese dollars is equal to $1.80 at the moment that we made this transfer. So what will be the result? Well, the Bank of Guyana is where they took the fee from, so that will decrease by $1.80 and become $83.20. And then here, exchange and transfer fees will increase by $1.80 and become $13.80. So on the same date, you click Banking, write a check, and you're taking the money from the Bank of Guyana, and it's the same date as the transfer, March 10th. Now, we have to put the exchange rate before we put in the money amount. And the exchange rate on the date of the fee is the same as the transfer. Now we're going to put in terms of the currency we're transferring to, because you can look at the result of the account where the money was transferred to and see how much was deducted. So it should be 200 Guyana dollars up here and 200 Guyana dollars at the bottom of the window, and the expense is exchange and transfer fees. Now when we click Save and Close, you can see the results are exactly as what we predicted. The Bank of Guyana has $83.20 worth of US dollars, and the exchange and transfer fees expense is $13.80. Now, you now have in the Bank of Guyana 5,000 at 0.008, and you have another 5,000 of Guyana dollars at 0.009. So your Bank of Guyana has currency that's valued differently in the account right now. You must do a home currency adjustment before transferring the money out of the account. If you forget, then your records will not be correct and your currency units will be out of sync with the balances of the account, just like we learned in the prior video. So I think you should take a look at the video for home currency adjustment if you don't remember the reason why you must make an adjustment before transferring the money out or paying the money out. Let's make the adjustment as of March 11th, the very next day. And let's make them all equal to 0.009 so that on the day that we transfer out, we don't have a problem. And the amount of home currency adjustment gain should be $5 because it's only 0.001 times the 5,000 that went in at 0.009. So let's go ahead and adjust it. Now, what will be the results? Well, the Bank of Guyana will increase by $5 because 5,000 out of the 10,000 units are increasing by 0.001. And the $5 actually increases down here. Did you see that? It increases the exchange gain or loss to be $5 more gain. Let's go ahead and do it. We click List, Currency List, Activities, Home Currency Adjustment. Now you must be careful of the date of the adjustment. It has to happen after all the other transactions and just for the Guyana dollar, and it remembers the most recent rate, so when we calculate the adjustment, it tells us the old balance of the Bank of Guyana, what the new balance will be in the Bank of Guyana after the adjustment, and the increase in the gain. We click the check mark to acknowledge that's the one we want to change, click Save and Close, and when we go back to the trial balance, the numbers are exactly as what we expected.
Chapter 11. Managing Unrealized Gains and Losses.
An unrealized gain or loss is a gain or loss that you do have but did not record as an entry or adjustment into your QuickBooks records. A realized gain is a gain that you did record into your QuickBooks records. So a realized gain or loss is a gain or loss from the changing exchange rates of the other currency, and it occurs when you either record receiving, depositing, or transferring money to an account of the foreign currency with a different rate from the rate that you actually acquired the currency from. Or a realized gain could be recorded in your records from making a home currency adjustment. And we have already experienced both of these. So in the case of a realized gain, each realized gain or loss is recorded as an adjusting journal entry to the account called Exchange Gain or Loss. Opening the account Exchange Gain or Loss will show you each entry, that means each transaction or each adjustment that caused an exchange gain or loss in your records. Since this account does not show you the exchange rate of each transaction, it might be better to open the report called Realized Gains and Losses. So what am I talking about? Well, if I open the trial balance, I can see I have the account that QuickBooks automatically put called Exchange Gain or Loss. And if I double click the balance, the account itself opens up and I can see every transaction where I had an exchange gain or loss. And if it's a credit, it's an exchange gain. If it's a debit, it's an exchange loss, and so on. And that explains why the current balance is a credit of whatever it is. And you can see each individual transaction or each individual adjustment where we acknowledged that there's a difference between the current rate and the rate in our books at the moment that we recorded this. But you can get this same information with one additional column that will show you the exchange rate at the moment of each entry. If you click Reports, Company and Financial, and then Realized Gains and Losses, you will get the Realized Gains and Losses report. And if you put them next to each other, you can see that they show the exact same entries. They show the same dates, same amounts, and same people, etc. The only difference is over here, there's a column called Exchange Rate. So if you double-click the January 15th payment, double-click, you see it shows what you put as the exchange rate at the moment that you recorded the transaction. Same thing with the adjustments down here. It won't really show the rate for the adjustment. The adjustment is just going to show you this one by default. So you would have to keep track of your home currency adjustments regarding what rate you changed it to. You would have to track that separately. But basically every transaction in this report is listed here in this account, except this report is a little more convenient because it has the column for exchange rate. Now, what do we mean by unrealized gain or loss? An unrealized gain or loss from the changing exchange rates of the other currency occurs every day. Each day, the exchange rate of all currencies change. Therefore, the values of any foreign currency you own changes every day and creates a gain or loss. If you did not adjust the rate with a transaction or a home currency adjustment, then the gain or loss for that day is unrealized and did not yet affect your QuickBooks records. So imagine the day you transferred money into a Guyanese bank account. Imagine you transferred 10,000 Guyana dollars. And imagine at the moment you transferred, those 10,000 Guyana dollars were worth 80 US dollars. But if you did not have a transaction or make an adjustment between the day of the transfer and the day that you're reporting the financial statements, then you did not account for the fact that on the day that you're making the financial statements, the $10,000 Guyana dollars are now worth 90 US dollars. Because the date that you run the statement was different than the date that you transferred the funds. So if you do not record a home currency adjustment before recording your financial statements, you will have an unrealized gain or loss for the change in the currency exchange rate between the last transaction and the date of the report. In this example, $10 is the realized gain, and it's the amount of the gain at the moment that you ran the financial statements. But what about our actual example in our follow-along step-by-step story? Well, the last transaction with Guyana dollar was March 11th, and in our Guyanese bank account, we have 9,800 Guyana dollars that are currently valued at 0.009 of a dollar. And that means we have $88.20 US dollars worth of US dollars in the Guyana bank account. But if we run a balance sheet or a trial balance on March 31, on that date, let's imagine each Guyana dollar is worth 0.008 US dollars. So your unrealized loss is 0.001 for each of the Guyana dollars you have. And since you have 9,800 of those Guyana dollars, your actual unrealized loss on March 31 in this example would be $9.80. Let's take a look. From the main menu, we click Reports, we click Company and Financial, and go to Unrealized Gains and Losses. Now, the first thing you must do is you must put the date that you're running the document, the statement, whether it be a balance sheet or a trial balance or whatever, because everything is based on date. And what you're saying is the Guyanese dollar was only worth 0.008 on that date. Then just click Continue, and you see the gain or loss is exactly as what we expected. The unrealized gain or loss, $9.80.
Chapter 12. Making multi-currency credit card transactions.
Just like home currency credit card accounts, foreign credit card accounts are exactly the same when you record transactions in QuickBooks, except you will have a realized gain or loss for the difference in currency value between the date of the charges and the date of the payments. You therefore must make a home currency adjustment right before each credit card payment or credit card credit. For example, let's imagine on March 20, we opened a credit account with the Bank of Guyana with a credit limit of $150,000, and since these are Guyana dollars, we have to create the credit card account in QuickBooks using that currency. We click List, Chart of Accounts, Account, New. Now this is a credit card type of account. Click Continue, and with all caps, type in That's all you have to put. But the most important thing is to make sure that QuickBooks knows the currency of this credit card is Guyanese dollar, and save and close. And that will give us the ability to record charges and payments using this Guyanese or Bank of Guyana credit card. So now let's imagine on March 25th, we charged Gina Casina for a delivery, and we charged 9,800 Guyana dollars on March 25th. And let's imagine at the moment we charged on March 25th, the Guyana dollar was worth only 0.008 of a dollar. Well, what will be the result? Well, for the very, very first time, the Guyana credit card will show up in the trial balance for the US dollar equivalent of 9,800 Guyana dollars at 0.008 each. And I happen to know that 9,800 Guyana dollars at 0.008 of a US dollar equals this amount, $78.40. And if that's the amount in the balance in the account, then that's the amount the delivery expense will increase because we charged a delivery with this credit card. So if we charge the delivery, then delivery expense will increase by the same amount, $78.40. And after we record this charge, delivery expense will become $658.40. So let's go ahead and record the charge. Banking, and then enter credit card charges. Now, of course, we're choosing the only credit card on the list, the credit card from Guyana, and the date of the charge was March 20th. Okay? Now, on the day that we made the charge, we charged Gina Casina, and now we get deliveries from her, so the related expense that we are charging is delivery expense. And the amount of Guyana dollars that we're charging for this delivery, 9,800. You have to make sure that the top of the window equals the bottom of the window, so the balance of the credit card goes up by 9,800 and the delivery expense goes up by the US dollar equivalent of 9,800. And lastly, at the moment that we charged, what was the amount? It was 8 cents each. So, excuse me, 0.008 each at the moment we made the charge. Notice, we know that the rate is correct because QuickBooks has converted it to US dollars. And QuickBooks is telling us this is the amount in US dollars that will increase both accounts in our trial balance. We click Save and Close, and we can see that the results in the trial balance are exactly as what we expected. Credit card for Guyana shows up for the first time as $78.40, and the delivery expense has increased to exactly the amount we expected, $658.40. And now, let's record paying the credit card bill. Let's imagine on March 31, we paid all 9,800 Guyana dollars to remove the balance of what was owed to the Bank of Guyana credit card. On March 31, the Guyana dollar was worth 0.007 of the US dollar. So you must make a home currency adjustment before you pay, or your account balances will be out of sync. And now you must actually adjust two accounts. And you may well ask, why do we have to adjust two accounts? Well, that's because our Guyana bank account is holding $9,800 in Guyana dollars that were previously worth 0.009 at the moment that we either adjusted or had our last transaction. And that's why the US dollar balance shows $88.20. But you see, on the day that we're paying the credit card, those same 9,800 Guyana dollars are only worth 0.007. So our bank account is only worth $68.60. What that means is we actually lost $19.60 from our bank account of Guyana at the moment we pay, because the exchange rate was lower from the day that we actually adjusted or acquired the Guyana dollars. But you see, we also have Guyana dollars in the credit card balance listed in our QuickBooks records. And on the day we charged those Guyana dollars, the dollar was worth 0.008. And that means those very same $9,800 that are in the credit card records were only recorded at 0.008, and the Guyana dollars in the credit card were valued at $78.40 when we charged. Now, on the day that we pay, they're only worth 0.007. So that means that same $9,800 that we owe in Guyana dollars is now only worth $68.60. And guess what? You actually gained $9.80 between the date that you charged and the date that you're going to pay. Now, you may well ask, why is this a gain if the amount decreased? Well, it's very simple. You originally owed $78.40 in US dollars on the day that you charged. But on the day that you pay, you don't owe 78 US dollars. On the date that you pay, you only owe 68 US dollars because of the decrease in the exchange rate. So that's why in the case of the credit card, you gained $9.80, even though your bank account lost $19.60. So what was the net loss? Well, if you lost $19.60 on one account, but you gained $9.80 in the other account, then the net loss, which will be the net adjustment, home currency adjustment, on March 31st, before we record paying, will be $9.80. And after we pay, both accounts should be equal because they will have the same number of units, and each of those units will be valued in the same amount. So let's go ahead and make our home currency adjustment. We click List, Currency List, then we go to Activities, Home Currency Adjustment. Now, we're only adjusting the Guyana dollar, and the date is the most important thing. The date we're adjusting is March 31st, and on March 31st, the Guyana dollar was only worth 0.007. We calculate adjustment, and we see the bank account lost $19.60 because it was worth $88.20 when we adjusted it last, but on the day we pay, it's worth $68.60. Credit card also. It was worth $78.40. Now it's only worth $68.60. So here's the loss, here's the gain, and we're going to see the net amount. Click the check mark next to both of them because you are adjusting both accounts. When we click Save and Close, we can look at the trial balance, and we can see the $9,800 of Guyana money is $68.60 in the bank account, and that same number of Guyana dollars is the same amount in the credit card account. And if we double click this exchange gain or loss, you can see we just lowered this. We just had a net loss of $9.80 put into the exchange gain or loss account. And now we can pay and put them both to zero, and they will be in sync. From the main menu, click Banking, write a check. Now, the money is coming from the Bank of Guyana to the credit card, Guyana credit card. And the date is March 31st that we paid, and we're emptying the entire Guyana dollar bank account. And we're paying off the entire balance. Don't forget, you also have to change the exchange rate and make sure that you put it to be the same as the rate you adjusted it to. Then when you click Save and Close, you can see Bank of Guyana is properly a zero balance, and Credit Card Guyana is properly a zero balance.
Chapter 13. Accounts Payable Multi-Currency Transactions.
The Accounts Payable feature in QuickBooks is only necessary when you owe money directly to the vendors who perform services for you. Usually, you need to continuously owe them for more than 1 month's worth of service or bills in order to benefit from using the Enter Bills, Pay Bills window in the Accounts Payable feature in QuickBooks. So why is this an accounts payable issue? Well, that's because on the day you receive the service from the vendor, the dollar amount of the currency you owe is based on the exchange rate on the day of service or product delivery, and that should be the date of the bill. So let's imagine that you got a bill for 10,000 Guyana dollars, and on that day, that bill and those 10,000 were worth 80 US dollars. Now let's imagine on the day you go to pay the vendor's bill, the value of that same currency is different because exchange rates change every day. Well, in a case like that, you would have a gain or loss on the exchange at the moment you use the Pay Bills window to pay the bill to the international vendor. For example, let's imagine on April 2nd, you received delivery service from Gina Casina and a bill for the service in the amount of 10,000 Guyanese dollars, and it was bill number 8472. The Guyana dollar was worth only 0.008 US dollars at the moment we received the service and the bill. So what will be the result? Well, we know that accounts payable Guyana dollars will show up for the first time as 80 US dollars because that's 0.008 of 10,000. So the equivalent of US dollars that you owe will be $80 for the service you received. And because you owed $80, that means you received a service worth $80. And because it was delivery service that you received, delivery expense will increase by 80 US dollars and become $738.40. Let's record the bill. We click Vendor, Enter Bill, and the date of the bill was April 2nd. The vendor was Gina Casina. QuickBooks remembers she gives us delivery service. And again, the date of the bill, well, the due date we'll leave alone, but the amount of the bill is 10,000 Guyana dollars. And at the moment we received the bill, the 10,000 Guyana dollars were in fact worth 0.008 US dollars, making it worth $80. You see right up here. We click Save and Close, and the numbers are exactly as what we expected. Accounts payable in Guyana dollars becomes 80, which is what we owe, and delivery expense in terms of US dollars became $738.40. So now we continue our example, and let's imagine on April 8th, we transferred in enough money from the Chase bank account to the Guyana bank account to be able to pay the whole bill from Gina Casina. On April 8th, the Guyana dollar was worth only 0.007 of the US dollar. So, to make sure that we transfer 10,000 Guyana dollars, we deposited and transferred 70 US dollars into our Guyana bank account, and that became 10,000 Guyana dollars that we will then pay from. So what will be the result just after transferring the money? Well, the Bank of Guyana increases to 70 US dollars because that's what the 10,000 Guyana dollars were worth at the moment we transferred it. And if 70 US dollars transferred to the Guyana bank, that means the Chase bank account here in America decreased by $70 and becomes $2,493 at the moment we transfer the 10,000 units of currency at 0.007. So these will be the results after the transfer on April 8th. We click Banking, Transfer Funds. We put the date April 8, and we're transferring from the American bank account with Chase to the Bank of Guyana. And the number of Guyanese dollars that we're transferring at the moment that we transfer is 10,000, and the exchange rate at this moment is only 7.007. It happens to be there. If not, then you would put it there. Now, when we click Save and Close, the results are exactly as what we expected. The Bank of Guyana now shows 70 US dollars for the 10,000 that we put, and the Chase bank account was decreased by 70 US dollars, and it's the exact number that we predicted or expected. Now let's continue the example, and on the same day, April 8, we actually pay Gina the 10,000 Guyanese dollars that we owe her. So at the moment we pay, on the same day of the transfer, what is the gain? Well, we originally owed 80 US dollars because that was what it was worth when we got the bill. But at the moment we pay, we only owe 70 US dollars because the 10,000 Guyana dollars that we owe are now only worth 70 US dollars. So the decrease per Guyana dollar is 0.001, and that means that when we go to pay this bill, we will have a gain of 10 US dollars because we actually owe $10 less from the moment we owed the money till the moment we paid as a result of the exchange gain. So what will be the result after we pay? Well, both the Bank of Guyana and Accounts Payable Guyana should both become zero. Bank of Guyana becomes zero because we gave all 10,000 units to Gina. And Accounts Payable Guyana should become zero because we gave all 10,000 units to Gina. But we had a $10 gain, which will increase our net gain or loss on exchange, and it will become $31.50. Let's go ahead and pay the bill. We click Vendors, Pay Bills, and of course, we're not paying from regular accounts payable. We're paying from Account Payable Guyana dollar. And now we see the only Guyana dollar bill we have is this one, so we click the check mark because we're paying the whole bill. QuickBooks remembers the payment date and the exchange rate that we put in a moment ago, but be careful. The money is not coming from the Chase bank account. The money is coming from the Bank of Guyana. And that means the balance will go down to 0 units of currency as we pay 70 US dollars. When we click Pay Selected Bill and then click Done, the Bank of Guyana is 0 because we paid all 10,000 Guyana dollars. Accounts Payable Guyana is 0 because we owe no Guyana dollars at all. And just like what we expected, exchange gain or loss increased to the $31.50 that we expected.
Thank you so much for making it all the way to the end of this QuickBooks Desktop multi-currency video. I want you to know I have a video for anything else you could possibly need in QuickBooks or QuickBooks Online. So please remember to keep in touch using the comment sections below, and please remember to click like after watching each one to help support the free channel for everyone. I hope you will subscribe, and please stay in touch.